I'm your host, Chris Noggle, and welcome to the show, everybody. Thanks for joining us. I've got an awesome guest here. He looks like he could be my kid, but he's not. Just calling it out there. But our guest today is 25 years old, has complete freedom. We're going to get into that a lot. He entered real estate at the age of 16. I relate because my first company was when I was 16 years old. So we're going to hit that. He quit his job. He quit trading hours for dollars at the age of 23. You all want to learn how this works. So our guest today, Dan Haberkost from Colorado Springs, is going to tell you how he did it. But before we get into Dan's story, let's talk about all of your journeys. Let's talk about your journey to becoming a rebel banker. Your journey starts with getting knowledge, watching podcasts, going on YouTube, TikTok, Facebook, Instagram, you know it all. That's what you do. And you gather all this, I'm going to call it useless knowledge, because knowledge means absolutely nothing if you do not apply it. So I'm going to put the challenge on you. Don't just watch this podcast episode just to get the kicks or to see how somebody became successful from 16 to age 25. I want you to actually apply the golden nuggets you learn. And here's how I'm going to test your ability to apply. I'm going to give you some free shit. That's right. I'm going to give you my new booklet, Drifting Away from Traditional Car Buying. This is how you get all the money back for every car you will ever buy, drive, and own. So you want that? Great. It's free. Go to chrisnoggle.com, 2 index swipes on the mouse, and right there you'll see the registration for our Wealth Webinar Series, which is a weekly show we do every week, 100% free. Click to register. Oh, you can't join, no big deal. You're just there for the free goodies because you were told to challenge applying knowledge. So do that and get the booklet. But with that being said, let's dive in. Dan, welcome to the show.
Yeah, Chris, thanks for having me. And I appreciate that kind intro. I'm excited to talk a bit with you and hopefully help your listeners.
Awesome. I mean, 16 years old, you got into the vicious world of real estate in the form of management. So why don't we do this? Why don't we start, Dan, with tell everybody, I gave a little intro, but give everybody a kind of a snapshot of what you're doing today. And then let's take a trip back in time to when you were, well, we can go back to 15, 16, wherever you want to start, but I want that journey.
Yeah. Okay. So snapshot of today, I live in Colorado Springs, and then I have an active business, which is Front Range land and development. And that entails buying and selling of land, some on cash, some for notes, and then building on the prime parcels. And I see that as the scalable income source that then feeds the passive investing of buy and hold rentals. So kind of as we talked about before, right now, more in the single family, so residential space, but going forwards, I especially going into next year, and I'm looking to start buying larger assets. I've really figured out how to scale my income and have not proportionally scaled my investing. So that will be a big goal for next year. So that's where I'm at today. To backtrack and start at 16, well, I was managing a farm while I was in high school, and my boss gave me all of his rental properties to manage in town as well. He spent a good portion of the year traveling, as many investors do, and left me to deal with it. And these were not nice properties. These were C plus at best, probably more C minus properties. And he had a very confrontational dynamic with the tenants, and they weren't well kept up. So I remember when I was a teenager having to leave school and go straight to one of the houses, ripping up a carpet covered in some sort of feces in a 90-degree humid Ohio day. So that was my first experience with real estate. Wasn't a whole lot of fun. I did that my last couple of years of high school, and that did not make me want to invest. However, I continued to work alongside school throughout high school and college. I actually ran a landscaping company while going to school my last few years of college. And it was at that point where I thought, okay, I'm going to school full time. I'm working 45 to 50 hours a week. And that was kind of the story of everyone I grew up around, my family, siblings, cousins, uncles. I was the young one, and everyone just worked, trading hours for low amounts of pay. And I didn't want to do that forever. So I thought, okay, I've gotten a good amount of experience managing other people's businesses. This was when I was finishing up college. Well, how can I take the education I have and apply it to some sort of business or investing to create some level of freedom, right? So I didn't have to just follow the same story that everyone else around me did. And I started reading, and of course, came across Rich Dad, Poor Dad like just about everyone else. And it was like a light bulb went off. Just the idea of creating income streams and not just trading hours for pay, right? Using the money you have or building a business that will pay you continually without significant input from yourself was just revolutionary. And it was right about at that time at work, one of my coworkers goes, yeah, my wife and I just bought a duplex. We finished renovating upstairs. So tenants are paying the mortgage. I thought, that's an interesting idea. So that was right my final year of college. And I went and bought a house hack there shortly after, before I even graduated. And that was kind of how it started. Ended up leaving Ohio. So that was near Cleveland. I grew up about 40 minutes outside Cleveland. Leaving Ohio, moving to Colorado, wanted to climb, hike, snowboard, all that sort of thing, and bought another house hack. And shortly thereafter, I realized, okay, I need to figure out a way to scale my income. Sure, there are low and no money down strategies, but this is a lot easier if you figure out how to make a bunch of money. And then they're synergistic in that it helps you pay less taxes to buy rentals, and having cash makes you able to buy and hold rentals with less risk, right? Because things are going to go wrong. Big expenses are going to pop up. Eventually, we'll have some sort of a recession. So I started networking, went to the local meetups here in town. And at one of them, I met a guy who had spent his whole life doing land and development all across the western side of the country here. And I helped him in his business, drove about an hour south of where I live here in the Springs, once, sometimes twice a week. And after about a year, we started just doing deals together, got my feet wet into buying and selling land, even involved in building some houses. And now, so this was 2018, 3 years later, I'm just doing it myself, and he's an investor and a friend. And so the active business feeds the passive, and working on building the business slowly, but also being mindful of why and what I'm trying to accomplish. I've actually taken most of this month off so I can refocus and reset goals, because I've solved all the issues that initially led me to create a business. So I didn't want to, I like to be intentional in everything I do. So spending some time, setting some goals, figuring out what the why is going forward, and how to set some goals that align to that why.
All right. So there's a lot to unpack in there. I mean, at 16, you kind of had the ability to manage some really crappy things, and I'm hearing your story about these tenants and how this landlord just was, I don't know, he just felt disconnected to his tenants and just didn't take care of the properties. And it brought me back to that song from William Shatner, or Pulp, whichever one you look at. It was called Common People. And I was thinking, there's the common people with roaches climbing the wall, and then there's this landlord who just didn't give a crap, which that's not a good, business model, and it's not a good landlord. But the other thing too is, you realize that if you just get into the rat race that you're taught from school to college to everything else, of just working for somebody else or even working for yourself, but trading hours for dollars and believing in the hustle is all there is. If I work harder, if I work longer, I get ahead more, I buy more things and nice things. You wanted freedom to rock climb, freedom to snowboard, freedom to do all that. And a lot of people don't quite understand freedom. Some people, justify freedom as, the ability to have enough money to buy the things I want. That's really just, money is a tool. It's using that tool to go out and buy useless things that don't get you anywhere, but put you deeper and deeper into that same trap where you have to work harder just to support the things that you've been buying. But you didn't do that, and you found a way through real estate to actually make passive income. And I always tell people there's no such thing as truly passive income, because you're always going to have to do some form of work. But passive can be the opportunity to create freedom. And let's spend just a second about that journey from Ohio to Colorado. And what went through your head? What were your struggles? You made a big leap. I mean, you were young, so maybe you didn't have, the family and everything else to support. But a lot of the people listening to this will like that you did it at such a young age. You made this big leap and you went deep into this real estate. But too many people are probably thinking, this guy's probably had money, to do this. He probably comes from a family that supported him in this move. What was your financial situation when you made this move and dove in?
Yeah, let me backtrack for a second. I grew up in a very kind of, I like to joke that nothing's changed where I grew up in Ohio in the last 100 years. Very depression era mindset is still what I grew up around, right? So my dad's probably the biggest worrier I have ever met. The sky's always falling. We're always going broke. When I was a kid, if I wanted anything above food or clothing, if I wanted to go to the rec center, if I wanted a cell phone, I had to buy it myself, right? In middle school, I was buying and selling stuff on eBay. So by the time I left Ohio to Colorado, I was pretty solid financially because I started working very young. I paid for school myself because I worked full time and I ran someone else's business. So yeah, when I left Ohio to Colorado, I had the duplex, didn't have any revolving debts. Again, paid off my schooling, got a double major in business administration and management and leadership. So paid for that cash. Same thing with my car, paid for that cash. So at that point, I was in a fairly solid financial situation, and I did stay in a job for a bit while I was in Colorado. I didn't leave until was that 2019. So it was just over 2 years ago when I left my last job. But yeah, no, I almost feel that if you come from privilege, I almost think that's harder in some ways because if you're given everything, you just don't learn how to do anything yourself. You don't learn how to put up with any sort of pain, uncomfortability, or just to work for things. And so having not come from a lot, I mean, we weren't homeless or anything like that. But again, if I wanted anything above the basics, I had to go get it myself. So by the time I moved to Colorado, I was comfortable because I had very few debts other than the duplex was it. And obviously no wife or kids. But that situation was because of decisions I made at a young age to not waste my money, save my money, work 45 hours a week to pay for college, so it didn't just happen that way. I made it happen that way. So I kind of ranted a little bit there, but I hope does that answer the question?
Yeah, and you mentioned a couple of things. I mean, you worked, which I hate to say this, in today's world, there's a lot of people not working because they're making money in crypto and all these other places, but that's going to probably come to a fierce sharp end, and then all of a sudden some people are going to have to actually go back to work. But when you were working, you said another thing. You were following the laws of wealth, not knowing you were doing this, because the laws are very clear. Law number one of building wealth is you have to save, or I like to call it keep, not save. I hate the word save. You have to keep 1/10 of the money you make. So in order to do what you were doing, it wasn't a capacity because you worked. I mean, a lot of people work, but you didn't just work and then spend. You worked and then you kept some of that money, which enabled you to then move out and start doing more of this stuff. And I want to hone in a little bit about, where did you learn to keep money, or most people would know it as save money? Like, who taught you that, and why was that such an easy thing for you to do?
That I would attribute to my parents, but it was almost taken to an extreme, to the point of it being a negative, right? It was such a fear-based mentality that I was raised on, and I still am working to get out of that today. But yeah, that really does come from my parents and family, just because, again, that ultra-conservative fear-based background is what I was raised on, and they never had money. They have 4 kids, me being the third. So yeah, that definitely comes from childhood.
Yeah, I can relate. I grew up the exact same way, and watched my mother struggle the whole time. So I'm still that way. It's sometimes hard for me to get out of that fear-based scarcity mindset. Even though I live in an abundant mindset today, I sometimes slide back into that. I saw a meme the other day. It was hilarious. It was of this guy, like working class guy, just with this distressed look on his face. And it said, it was about, Dad will never recover from this one. And then the meme was, you left the lights on.
Yeah, that sounds about right. Yep.
Yeah. Yep. So, and I grew up with that, if you left the light on in a room that you walked out of, why we're not trying to light this place when you're not in it. It was always something where, oh my God, forbid you leave a door or a window open. We're not heating the outside, and the father saying, I'm never going to recover from this. I'm sorry. I'm in a joking mood today, but that is real. Like that's a real thing, that scarcity mindset. It's very difficult to break. I mean, I'm older than you. I'm 44, and I still suffer with that because of my upbringing. But, there's nothing wrong with that, because it does keep you level. And I always like to keep myself broke because it keeps me striving for the next thing. I think when a lot of people have a lot of money just sitting somewhere, they don't feel broke anymore, so they get laxed. They don't work as hard. So that would violate law number 2 of wealth, which is moving your money. So you saved your money, kept your money. And after that, how did you deployed it? Was your first deployment to make your money work for you, the house hack? And please describe and explain what a house hack is to the audience, because I think a lot of people like, house hack, what's that?
Yeah, absolutely. So the first one I did was a house hack. And you save a little bit of money. You have either 3.5 or maybe up to a 5% down payment. You can get a lot out of that. So if you find a decent a house or even a small 2 to 4 unit, and you get the dealership or you get the deal done, move into one part of it, and then root out the extra, you can have your entire mortgage paid for, or even sometimes above that, while the loan is paid off, while you have taxes advantages, and then while it goes up in price over time. So my very first buy was a duplex, one terrible side, one very nice side, put the tenant in the nice side. I fixed up the terrible side while living in it. And now that's the rental I still have today. So yeah, that's an excellent way to start. And it's almost like training wheels for management, because if you're right next door, especially if it's a single family house, it's a lot harder for your tenants to get away with anything. So it's really, really hard to go wrong with house hacking. I have friends who have kids who house hack. So, if you make a lot of money already, maybe it doesn't make sense, but there are few people who can make excuses for not starting with house hacking, because it can just compel you so far in your journey.
Yeah, my first house, I bought my uncle's house, and I did a house hack because it was a struggle for me to, even though it was a $105,000 house that I bought, but I rented bedrooms out in that house, and I talk about those rentals, and that's how we were able to do it. And it was a lot of fun. But your situation, I believe, was a duplex. So the house hack is awesome because you can do an FHA backed loan or some government backed loan, which only allows you or only requires you to put down 3.5% to 5% down payment. Most people can save or keep enough money to make that down payment. And then when you get in there, now you've got this awesome asset. And if you're smart about it, you rent out the other room or the other unit. And now all of a sudden that rent is paying your mortgage, or at least very close to it. It's a phenomenal strategy for anyone listening that might be younger. You're kind of trying to figure out, how do I get into real estate? How do I get out of mom's basement? Whatever it might be. That might be your first avenue. It certainly works, and it does teach you some really good fundamentals in real estate investing. So how did you go from the house hack to the land flipping and all that? Like, I know you told it in the story, but let's just kind of chronologically go through that. So you did the house hack, and then what was your next step, and how did you do that? So you saved enough to do the house hack, but where did this next catapult come from?
Yeah, great question. So did the second house hack in Colorado, and that was right where I was coming to the realization I needed to figure out how to make money, and I just can't work for someone else. I hate it. So that is when I started going to the real estate club. I actually, it was within a week of moving to Colorado. The guy stood up, said, "Hey, I need some help on my business." Of course, everyone gathered around him because he's very experienced. Out of the, 20 some people he gave a number to, 2 of them called, myself and one other. Oh yeah, I know. Unbelievable. The other guy gave up after a week or 2. He goes, "Yeah, I don't think I can do this." And okay. And I just stuck with him because it was very clear right away that this guy had done everything I wanted to do. He had rentals all over. He had built them, storage units. I mean, everything, notes. So it took a lot longer than I wanted, but I continued to get up on weekends, go an hour south of me and go see him and help him on the technology side of his business. And eventually I just started to learn, because he's in a town down south that has a big failed subdivision from the 70s. Actually, the same guy who did Lake Havasu, if you're familiar with that, in Arizona, did this exact same development at the base of a reservoir here in Colorado. And it was just behind. It hadn't taken off yet. And so I learned from him how to buy and sell land, how to build. And so it took time, but eventually I just started doing it myself. I would do deals with him, or really I started just watching, and I started adding little bits of money and helping him with the builds, the new builds, and then got to the point eventually where I could just do it myself. And that's where I created Front Range Land, because it all starts with the land and buying and selling land, selling some on notes, speaking of being the bank, and then also just building on the prime ones. But especially in the last year, buying and selling the land has been most profitable.
That's great. And a lot of people right now, because the market's just, it's in a bubble. I don't care what people think. They're like, "Oh no, it's just supply and demand." You are delusional if that's what you think. We are in a bubble, just like we were in a bubble in 2006 and 2007. We all know what happened in 2008. So you can just forecast what might be on the horizons. But being that the markets and the real estate market specifically is in somewhat of a speculative bubble. It's hard to buy properties right now.
Yep.
It's hard to go out there and find them. It's hard to actually get enough money to buy them, especially if you're new. You're fighting, the experienced investors with deep pockets and lots of private investors. So how are you actually finding deals? And specifically, you've kind of learned a little bit about seller financing. I got a bunch of friends that do a lot of seller financing, which has been a really great fit for this kind of speculative bubble in real estate. So can we talk a little bit about how you've financed these properties, how you've played in this market, and then, this deal that you did seller financing?
Yeah, that's a great question. So this one actually came off of Craigslist. Craigslist has got to be the most underrated platform. I have sold so much land on there. I've met people who have then bought, 4, 5, 6 parcels from me. I met one of my investor friends, actually, who's a friend who invests with me now, originally off a Craigslist ad. And then a guy posted several months ago, said he was an older investor. Him and his wife had owned a bunch of houses for 30 plus years, so they're paid off, and he wanted to sell them. He wants to owner finance them, but finding someone who was reliable is the key. So a friend of mine, the one I just referenced, actually brought this to me. So he and I bought it together. And ARV is about 340. We're going to have put about 22 or 23,000 into it. Bought it for 250 at a 3% mortgage, 2 years interest only into 15-year amortization. So that, in my mind, to your point about being close to recession, is really important. Having low interest, very manageable debt like that and having it cash flow makes a huge difference. And then also just the fact we bought it below market, and then add in the fact that it's just a C plus, B minus, probably B minus, because that section of the neighborhood's nice. Rental for a family. All these factors together make it, you can never take out all the risk, but it makes it a much safer investment, right? A lot of people fail in the recessions, talking with people who are older than myself, if they run out of cash or they have a balloon mortgage of some time, or they have to pay back their investors in a syndication or whatever it might be. So a permanent mortgage, 3% interest, we bought it undervalued, we did the rehab, and it's very nice as far as single family homes go. We'll screen our tenants, obviously. It's just finishing up the rehab. That was a lot to answer your question, but those are kind of the reasons I feel safe with that. I think investing right now is still wise if you follow the basics. You got to buy at a discount, needs to cash flow, has to be a reasonable sort of financing, right? The balloons scare me a little bit. And then, of course, you got to have cash, because at the end of the day, as long as you have liquidity, a lot of my older friends that lived through 07, 08, it's just because they had some liquidity. That's really it. And their property's cash flowed, so they're fine. So that's kind of how I look at this one. And yeah, it's just an older investor who has plenty of money, but he's done. He didn't want to deal with the rehab. He just wants to go with his wife, and that's what he got to do. So he has a whole portfolio of properties he wants to sell.
And I think that's another thing too, that I think a lot of people fail to do right now is find, a mentor, find somebody that's got knowledge and wisdom, that's in the business, that maybe just needs some help. And that's kind of the break you got. And there was 20 people that all sat there and took his number. It blows my mind that a whole bunch of them never called him. And that just shows you the broken mindset of people out there. Everybody wants handouts today, it seems. Everybody wants everything to be easy. Well, folks, here's the facts. Nothing's easy. Building wealth isn't easy. Real estate isn't easy. Making money, all this stuff. You want it to be easy, but it's not. And you're either gonna completely fail, or just have to, put your hand out and expect everybody else to try to give you something. We all know where that goes. Or you're gonna go out there and you're actually gonna take action, like I mentioned earlier, take the knowledge you're getting here and apply it and do something. So, one thing you did, Dan, is you actually took action. The guy gave an opportunity right there to 100 people at this thing. 20 people took his number. 2 of them called. One guy said, "Oh, this isn't for me." After a week, that's not even an effort. That's like showing up to football practice and the coach says, "Hey, you got to run back and forth down. Let's see you do it." You run to the one end and you're like, this isn't for me. Just put the effort in, and you did. And that paved the way. You learned a lot. I'm sure it wasn't easy, but then, right now there's a lot of real estate investors that are older and that maybe just want to kind of move into that freedom part of their life where they put a lot of time in operating the real estate business, but now maybe they want to start spending more time with their family, traveling more. COVID kind of woke them up a little bit. How would you suggest people find those investors? And then once they find them, how could they serve them? Because everybody wants me, but it's all about what can you do to solve that person's problem? So
Yeah.
what advice would you give to the young folks out there, because you're relatively young,
Yeah.
that maybe would help them get into this industry, even if they don't have much money?
Yeah. Well, I'm glad you brought this up because I think the easiest way to learn anything and how I pursue anything is assuming that it's not new, which nothing within real estate is new. You can find someone that's already done it, shorten the learning curve by learning from them. So I would either go to your local real estate club. I wouldn't say either. I would go to your local real estate club. There are a lot of people at those that tend to be tire kickers and maybe not really be worth it. But, I host the one here that I originally went to now. And there's a good 20%, 10, 20% of the room who are serious business owners. So it's still worth going to. And you can find a lot of older investors there. And as far as providing value, talk to them, listen, and find something that they need help with. Try and propose. Don't say, oh, I can help you. Well, then they have to figure out, well, what can you do? How can you help me? What do I need help with? No, find something that they need, whether they tell you directly or they allude to it, get to know them and don't look at it as transactional. Most of the people I do business with, invest with, have really just become friends over time. And if you look at it as transactional, that isn't going to work. So that's a great source as a local real estate club and finding a way they need help and helping them in their business. Again, especially without them asking, even if maybe you don't know real estate yet, but maybe you know computers well and how to use them and post on them and that sort of thing. And they don't. And that was the example with my guy. Aside from that, I would probably go the route too, if I was brand new, of trying to get a job with a local investor, whether they're a flipper or a wholesaler that needs a cold caller. I mean, there's a lot of ways to do it, but it's so much easier and less risky to learn under someone else who already has a successful business. So that way you have a stable or semi-stable income. They're putting out the dollars for marketing and such, and you can see how it's done. So I would go one of those two ways. And then you can always pay someone if you're willing to go that route for a course, but I would be careful there. If it's a practical turnkey business, that's one thing. But if it's just pay me 40 grand and I'll teach you how to make $1 million tomorrow, those ones I would be cautious of. So yeah, the local real estate meetups or find an investor you can go work for is probably one of the best ways to do it.
Well said. It's just the age-old thing to success. You either invest your time or you invest your money or you invest both, and that gets you there. And I can tell you personal experience. I ran a real estate meetup here as well for years and years. We had hundreds of people that would show up. And this one RIA, we were just talking about stuff, and in the front row was this young guy, probably 19 years old. He sat right up front, intently, like listening and watching. And when I got done, before I got off the stage, he stood right in front of me and he says, "Are you hiring?" And I looked directly at him and I said, "We are always hiring." And you could see he kind of got happy. And then I said, "But we don't pay." And he said, and I was expecting him to kind of move out of the way, so let me get off the stage. And he didn't. And he said, "Well, what do you mean by that?" And I said, "Well, we're always looking for good people, but we don't pay. We do internships. You come in and you're basically a fly on the wall for everything that happens here. You get to see all of what we're doing. You maybe even get to take part in some of these things, but you put your time in, and that's how you learn. So time is money, and this is an education. So if you're interested, show up this day." Well, he showed up, and that had to be 3.5 years ago. Dimitri never left. He never left. We eventually put him on payroll and we had him doing filing. I mean, stuff that most people, like that one guy, would be like, "Oh, this isn't for me." Did the filing. Then I moved him up. And then me and him, we started a land flipping business as partners. So we got that going. And then after that, now we started a construction company. Well, I can't say we. He started a construction company. I gave him I paved the way and told him, "Here's what you do." He now is doing all the construction for all of our rentals that we're remodeling and selling. We got 2 flips that we're doing right now, and it'll probably be the last 2 that I do for a while, but he's doing them. And then I'm referring him over to other investors that I know to do work. So he's doing a killing right now. Plus he's got the land flipping. He's getting the experience on how to do this. And he's actually buying his very first renovation that he's going to then rent out. So, I mean, he just put the time in, folks. Everybody's afraid of putting time in because they're like, "Oh, I got to get paid for my time." Well, then good, go somewhere else. And I bet you a lot of very experienced investors would tell you to go somewhere else. But for the person that stands in front of you and doesn't let you get off the stage and says, all right, show me the way. Like, what does that mean for the future? I mean, Dan, you're a perfect example. Dimitri's a good example. I mean, can you say anything more about that? I mean, we pretty much beat it to death.
Acquisitions manager is a great example. She got out of the Army because Colorado Springs has a lot of Army presidents, and she wanted to learn about real estate. She knew nothing about real estate, but she was willing to do difficult things that I didn't want to do. She's been cold calling like crazy for me and has gotten a bunch of deals that way on top of the mailers. I don't really like talking to people, so she handles everything. She handles the transaction coordination. And so what do you know? At the same time, any questions she has about real estate or just buying rentals or anything, I'm happy to help her, introduce her to people. I brought her to the real estate group, introduced her to a bunch of people. And so she's quickly learning. She's making money, but she's not having to spend her money to learn the process, right? It's my money and my business at this point. She's learning under, I had a kid at the real estate club. This one gave up, but just to make an example, again, he's like, well, can I cold call all your return mail? And of course I was willing to help him. However, right, because that's difficult. So again, especially when you're starting doing the hard stuff for people that have established businesses, there's a reciprocity there where they're going to want to help you. There's a guy in town here who owns most of the Ace Hardwares and all the respective strip centers that they're in. And he's kind of in the place that I think I'm going to work towards here going into next year. And so what do you know? I had him come speak at the real estate club I host, and he loved it and he had fun with it. And, so finding people who are where you want to be and providing value, it really can't be overstated as to how important that is, but don't put it on them to figure out how you can help them. Figure out yourself how you can help them and not pitch it, just do it. I like what that kid did. I bet you appreciate the boldness of that, and I get that. So I hope that kind of helps.
It definitely does. And I did appreciate it. Not only that, I respected it because it's so rare in today's world that ever happens. I mean, there's just very few self-starters out there and very few young folks, if I can. I'm 44, so I guess I can say that nowadays. Young folks that are willing to put the time and energy, and they'll act like they do. They'll say they do. They sit there intently like, oh my God, I'm ready to go. But then when push comes to shove, when, knowledge has to turn into action, there's a big fallout. There's some disconnection mindset or just the way that we've been brought up where taking action is something people just don't want to do, but they think they do. But as soon as they see the work behind it, they don't. And he put the work in. So Dan, as we kind of get to the tail end of this, tell me, during this journey that you've been on from, let's take it back to 16 till now, what's been your biggest internal obstacle that you've had to face?
Oh, for sure. The way I was raised, the scarcity mindset. I mean, making a very tremendous income this year, I still catch myself going to the store and, can I spend that much on groceries? I'm like, wait. I have to stop myself. Like, that's so stupid. But anyway, so yeah, definitely getting out of that scarcity mindset. And then also developing some sort of self-awareness. At that landscaping company, my natural inclination is to be a driver. I can be really rough. As far as if someone's more sensitive and likes the small talk, I inadvertently hurt people's feelings. Gotten much better than that. I can be bad about giving recognition. So, and especially out here. So you're back east, right? New York. Okay. It's much easier for me to communicate with people back there because I'm to the point.
You just tell them what you think and it doesn't even matter.
In Ohio and New York, that's just normal. That's how most people talk. Out here, I got to sit back and I got to talk a little slower. And it's so different. So I would say those are probably the two biggest struggles, is getting out of that scarcity mindset, because that's held me back so much, just being absurdly worried about the world crashing all the time. And it's gotten a lot better. And then also just developing some level of self-awareness so I can communicate with people who think and communicate differently than myself. So those probably have been the two biggest things.
That's awesome. All right, Dan. So tell the audience a little bit, if they want to learn more about you, they want to find you, what are the best places? Where can they find out more about what you do?
Yeah, just Dan Haberkost. I created a website, danhaberkost.com, kind of walk through some of the deals I'm doing, what I'm working on. And then on Instagram and Facebook, I post pictures of projects and then also just the mountains, where I'm climbing and hiking and that sort of thing. So either of those.
Awesome. So folks, we'll put a link up to Dan's website, and his last name is spelled Haberkost. So it's danhaberkost.com. Check him out. He's got a cool story and also a fellow snowboarder. So, hey, another reason to actually start following him out there in Colorado Springs. But with that being said, thank you all for joining us for another episode of the Real Estate Money School. And Dan, thank you for your time today.
Thanks, Chris.
All right. We'll see everybody later.